Good morning everybody. It's my honor and pleasure to welcome all of you during our special webinar dedicated to annual presentation of publication called CEE Top 500 Ranking. So as probably you know, this is our 13th edition when we are presenting 500 the biggest companies located in our region, in the Central Eastern Europe region. And I think that this edition is additionally very important and exceptional important due to the fact that during 2020, a lot of companies, a lot of businesses been affected the COVID-19 situation. And about COVID, about the business, about the companies, about sectors, how it influenced, we will talk today. And from our perspective, I think also that it was a very exceptional period of time. First, I would like to thank all of my colleagues. Thanks to the efforts, especially from business information part of our group, we are able to collect all financials, all the data needed to create such a ranking and to present analysis. And now I would like to present my colleagues. First, Dorota Angotti, Credit Management Service Director in our region, who will give a presentation and give her opinion regarding ranking and probably maybe how it was created. And after Dorota, Grzegorz Sielewicz, our Chief Economist, will present his analysis, probably somehow in reflection to the previous economical situation, and I hope that Grzegorz will also give us some opinion or some information related to the current situation. So it's all of from my side. So I would like first once again thank you for being with us, and I would like to ask Dorota to start the presentation. So Dorota, floor is yours.
Thank you very much, Jarek. Yes, welcome to our webinar. We are so proud to present today the next edition of Top 500 Companies in Central and Eastern Europe. Before we go to details and our slides, I would like just to mention that all attendees of the webinar can ask questions by typing a question in the place which is indicated at the slide. You see it on the right side of your view or at your computer most probably. So please feel free to ask questions and we will try to answer with Grzegorz during this webinar. Grzegorz, if I might ask you to go to the next slide, because I would like to make a brief introduction of Coface in Central and Eastern Europe. I am sure that many of attendees already had the pleasure to work with Coface and are working with Coface in different areas. So first of all, our core business in globally is trade credit insurance, and Coface is assisting its customers in making good growth of company with safe background, with safe situation in trading. So we are very proud to offer trade credit insurance in more than 200 countries worldwide. Also in our region particularly, we have a very long tradition, longer than 30 years, with business information area and debt collection. We are so proud to offer credit reports and other products, I will show you on the next pages, that are helping our customers in making wise credit management decisions. Should something go wrong, then we can assist our customers with debt collection. We are offering also as one of very unique organizations worldwide debt collection. So you can rely on our professionals to collect your debts all over the world. Of course, being a credit management company, we support also our customers in monitoring of the situation, in getting new customers, in finding new interesting markets and new customers by using marketing data. And we have a very broad knowledge about global economical situation, and you will hear this today from Grzegorz. Coface has its own department for market analysis, and we have chief economists in every region. Grzegorz is representing Central European region. So we really trust, we are really great experts in global knowledge about economic aspects, but also about credit management, risk assessment. I might ask you, Grzegorz, to go to the next slide. I would like to show a little bit more regarding our competence in business information, because as Jarek mentioned, our regional CEO, this ranking top 500, it's presented and it's prepared by our business information unit. We are since 30 years present in Central Europe. We cover with our analysis and the data that we collect more than 30 countries directly in Central Europe. However, our customers can use our services from all over the world due to our partnerships with other information providers and with our colleagues in other Cofaces, where we are also collecting data and producing credit reports and other products. Only Central European database covers 35 million of companies. So we are really having data about commercial code companies, so proprietarships, but also very detailed information on insolvencies, on blocked bank accounts, on different information like export, import countries, which is very unique. And as we are also debt collection company, we also can share with our customers payment morality index, payment behavior data, which is key nowadays when all the economies are struggling with COVID and with some situations related to the procurement, to the credit management area. We are delivering to our customers more than 1.2 million reports per year. So you can see that the scale is very big. The team working on the reports, it's very big. We have specialists with many years of experience in credit management. So our scores and our assessment, it's, I must say, of very high quality. And many financial institutions, banks, factoring companies, and other trade companies really appreciate accuracy of our score, which is crucial because then it's our score is to calculate probability of default, and this is really important to know if there is any risk that company can be insolvent. So we have more than 5,000 happy customers using these products that I am describing. Let's have a look on the next slide on which product and which solutions we are offering to our customers to have really very accurate information. So this year we launched a new customer portal. You can, after webinar, you can visit our site if you still didn't have a pleasure and experience to use our services. Go to information.coface.com. And the variety of solutions is very good. We are offering classical business information reports, a short version called Snapshot and full report, where you can find lots of details and our score. But also we have a very unique offer because we propose to our customers products deriving from our insurance experience. These are scores. This is debtor risk assessment. Assessment made by our colleagues from insurance and now available also to our customers for business information. And credit opinion, it's almost a limit that we would give as insurer. So this is also very interesting, especially in high risk transactions or high value transactions, if you want to check what would be the assessment of Coface as an insurer. Additionally, our solutions like Business Finder can be used to search for new prospects, to expand your business globally. So this is also a very useful solution. And cross-border network, we are covering relationships between businesses in Central Europe, and it can be used to fulfill requirements related to ultimate beneficiary owner analysis. So I really would like to invite those who are still not using our business information solutions to visit our platform information.coface.com and try and see in details what we can offer to. Now let's move to the methodology of the score which we are using, because this methodology has been used to assess also the credit risk assessment of the companies that are in the ranking of top 500 companies. So if you could go to the previous slide, Grzegorz, sorry, you were too fast. On the previous slide, I'm explaining methodology. Yes, so the credit assessment, it's centrally calculated in the database. As you could see, we have 37 million companies in our database. So it's a very big statistical pool of companies where we can, based on this data, we can be very precise in preparation of our score. So this is, of course, statistical model that uses financial score and soft facts score. And we have different scoring model for SME companies and large corporates. In total, we are having 48 individual score models for the core countries in Central Europe. This development is of score and yearly review of Gini coefficients of our scores. It's made by our external partner company that is based in Germany, and it's founded by statisticians. So we rely on their knowledge. We each year download the data from our system, share the data with them, and they are assessing our scoring models and calibrating our scoring models. On the next page, you can see the result of what are the risk classes and what is the explanation of our risk classes. So statistical model is giving us 3-digit score from 0 to 999, but then we map this 3-digit score to 2-digit score, to 10 risk classes, because it would be too difficult for the users to deal with so many risk classes. So if we assess a company that is having excellent risk with the score of 10, this means that there is almost no risk to be insolvent for such a company. Up to extremely high risk of insolvency, or already when it's 0, it's insolvency preliminary debt regulation proceedings, which are already, of course, very big warnings for our customers. Should they decide to make business with such a company, the risk will be very, very high. What I would like to underline as last word of my introduction is that what is also unique at Coface, we are combining sources of information which are typical for business information companies and credit reports providers. So this is a credit score, but on the right side of the screen, you will see credit score for significant risk, yes, and this would be a normal assessment by credit management company. But additionally, we are adding Coface adjustment. This is adjustment deriving from insurance, typically late payment reported by our credit insured customers. And this is a kind of fine-tuning of the score based on the data which is not publicly available, which is unique because we as a company, we offer such a broad variety of products, yes, like trade credit insurance, debt collection, and business information. So we merge and aggregate the data to improve and to fine-tune our assessment to the benefit of our customers. So this is all from my side. I wanted to trigger your curiosity on our score. Last slide will be an introduction to the ranking, how the ranking has been made. So based on information which I already shared, based on our very big database of 37 million companies, a score that we have, 30 years of history and statistical models, we are able to prepare this top 500 ranking for Central and Eastern Europe. We did it this year for the 13th time. Ranking is based on financials of 2020. The source is, as I mentioned, our database, and it's the study is covering the countries which are listed in green on the slide. We have considered the biggest companies in each country with the turnover above 300 million euro. We excluded financial service providers. So on the ranking, there are no factoring companies, no banks, no financial institutions. And then some key indicators were analyzed, like net profit, number of employees, evolution of company growth and results, and all the data which has been published by companies about their financial results has been recalculated by us with Euro FX rate end of 2020. So as a result, this ranking of 500 companies has been prepared by my colleagues from Business Information Department, and I would like to thank my colleagues for this big effort, because this is the essence of our work that we prepare each year. What is also important is that there could be a situation that company did not agree to be included in the ranking. So maybe in your market, because at this call we have participants from many European markets, you might think, I know this and this company, it's very big, it's above 300 million euro turnover, why this company is not listed on the ranking? There might be a reason behind it, the company did not include for some individual reasons. So I believe, Grzegorz, this is my last slide, so I can hand over to you with explanation of economical part of the ranking. Thank you very much.
Thank you, Dorota. Good morning, ladies and gentlemen. Also, thanks from my side that you decided to join our webinar today. Well, so in my part, first, of course, we will focus on the ranking itself. So Dorota told us in details how it was created. So I think that's it's right time to look at details, at conclusions and results of this report. Already I've seen a question regarding the availability of our presentation for you. So yes, sure, we will be happy to share it with you. We will send it out. If you also need some more information, we will also be happy to share the ranking itself with the analyzes, with full tables. So just wait for the contact from our side. So indeed, it will be available. And I remind you that you have this opportunity, this possibility to ask questions during this webinar. So please use it whenever you want. So before I will talk about conclusions of the CEE Top 500 report, let me just briefly tell you, or rather remind you, regarding the economic environment that was in 2020. So the economic environment that was very crucial for companies that are included in our ranking. Well, I think it's unfortunately difficult to forget what was the economic environment, because as we all know, it was a huge contraction that was caused by the pandemic. As you can see on this chart, the navy bars that were present in terms of GDP growth in 2019 turned to very negative growth levels in 2020. So all countries in our region, in Central and Eastern Europe, recorded recessions. There was no exception from that. Some deeper, some not as deep. Those which suffered from the deepest recession, as you can see, it's mostly Croatia. And well, it's in line with global trends. So as we all know, the tourism sector suffered a lot from the lockdowns, from the hesitancy of people to travel, to going abroad. And not only Croatia, but in terms of other countries outside Central and Eastern Europe, those which are dependent on the tourism sector, they suffered a lot in 2020. And I would say that even if we see some rebound here, still those countries are quite far away in coming back to the same economic activity that we had before the pandemic. And here, in terms of 2020 growth, we have a quite different situation among countries. I think that it's in this very brief outlook, in this very brief reminder of that what was in 2020, it's worth to say also about Baltic countries, because I think it's a kind of exception. You might remember that during the financial crisis of 2008-2009, Baltics suffered a lot due to their economic openness, due to high share of the financial sector in those countries. Right now, at the beginning, expectations were also similar, but it seems that those countries, especially Lithuania, recorded not as deep recession as other countries, and that's thanks to higher digitalization, to higher share of the ICT services, where we've seen huge demand for products, for services to this sector. That's only one of the reasons for higher growth of Baltics. In terms of other countries, those largest economies in our region, well, it was not like it was a golden rule here, or the winning strategy to have not as deep recession as others, because as we know, exports suffered, domestic consumption, domestic demand suffered due to lockdowns and so on. So once again, as you can see, all of those countries suffered a lot. Then in the second half of 2020, we started to see some rebound, mostly thanks to the revival of global trade. And indeed, for countries in our region, we have lots of countries in Central and Eastern Europe that are open to exports, to external trade. That was quite beneficial. And on the other hand, it also had some negative factors, some disadvantages, because this recovery was actually faster than it was expected. And as we know, there were some shortage of inputs, shortage of parts that are used in the production process, higher prices of commodities that started to hurt economies, not only in the CEE region, but also other economies in the second part of 2020. And actually this impact is seen also this year, but I will talk about it just after providing you conclusions from the report, from our ranking. Well, so what are the results? Poland leads the ranking. So I would say again, Poland leads the ranking, because also in the past, it delivered the highest number of companies to the ranking. This time we have 161, so 2 less than a year before. And I think it comes with no surprise, because as you can see, Poland is the biggest economy in the region, so also it has the highest number of the largest companies. In terms of other countries, well, on the second rank we have the Czech Republic, then Hungary, and then on the fourth rank there's Romania. Looking at particular countries, we have similar share of companies that were a year ago. Maybe the biggest changes are in Hungary, because Hungary this time has 5 companies less than a year ago. And I think it's also worth to mention Serbia, which has this time 7 companies more in the current ranking. And also we have some small countries, like for example Baltics, especially Estonia and Latvia. Those ones have the smallest representation of companies among 500 biggest, largest companies in Central and Eastern Europe. And looking at overall data conclusions coming from our report, we see that the turnover of 500 largest companies dropped by 3.3% in 2020. I would say that it's worth to mention that this contraction was not as deep as the contraction of the economy, because as the average, the Central and Eastern European economy decreased by 4% in 2020. So those largest companies, they were not able to avoid such difficult economic environment, but nevertheless, it seems that their turnover didn't drop as much as the economy contracted. So looking at countries, we have various data for countries. Actually, there was only one country that was able to record higher turnover than in 2019, and that was Latvia. Its turnover grew by 2.1%. Other countries recorded the decrease of turnover. The deepest decrease was in countries like Bulgaria or Czechia, where the decrease of turnover was 8 or even 9%. We also had a contraction of turnover in Slovenia by 8%. Other countries were somewhere maybe not in line, but close to the regional average. That's on countries, and I said that Poland remains the country with the biggest representation of CEE top 500 countries. It also has the company that is ranked #1. It's the Polish Orlen petrochemical company that remains to be the biggest company in Central and Eastern Europe. And how does it look in terms of sectors? Where this chart shows you that we have two very large sectors in terms of the biggest companies in Central and Eastern Europe. Those are minerals, or rather to be precise, there's a very wide sector of minerals, chemicals, petroleum, plastics, and pharma. And this time we had 89 companies coming from this sector. And on the second rank, we have automotive and transports with 84 companies. So those two sectors remain the largest ones. And actually, to tell you the truth, in previous years we had those two sectors moving around first and the second rank. A year ago, we had the automotive and transports ranked #1. And well, we have lots of investments done in our region. Our region remains, or rather, the production of not only cars, not just vehicles, but also components to vehicles remains strengthens and strengthens. It becomes larger and larger. So I think it's that the automotive sector remains a very big one. And it could again in future years, it could be again the #1. But here, as you can see, other sectors looking beside those two are also quite crucial. Here I mean non-specialized trade. This is a very big sector. I would say that thanks to the household consumption that remains the driver of growth in our region. So lots of not only local companies, domestic companies, but also large foreign entities are present in our region with their companies, with subsidiaries of their companies. They want to benefit from this strong household consumption that we have in our region. Also, the ICT sector, which I mentioned, the example of Baltic countries, but also in many other countries, we have lots of ICT companies, and that are also both domestic ones and external ones, that the latter also use this opportunity to take a benefit not only from the educated workforce, but also from attractive labor costs compared to the Western Europe. And here to finish this picture, we have also two smallest sectors with the representation of just two companies in each of them. So that's textile, clothing, and paper and packaging sector. You can see also that from wood and furniture, we have also not as huge representation of three companies in the latter sector. I think we have lots of companies that maybe are not very large ones, but there are lots of them in countries in our region, depending very much on the export situation, because a bulk of the production is exported. Well, And now let's take a look at dynamics of the turnover growth of particular sectors, and also the dynamics of the change of employment. So here on the y-axis, you have the change of turnover of particular sectors. And actually, I think that this chart refers very well what happened in 2020, what was the impact of the pandemic. As you can see, the biggest impact, I mean the negative impact for sectors in Central and Eastern Europe, according to the ranking of 500 largest companies, was for oil and gas, so minerals sector. As you remember, especially during the first wave of the pandemic, we had a huge drop of oil prices, of other commodities. That, of course, does not apply anymore. Right now, we have a huge increase from that period of time. But all in all, for 2020 financial results, it made a significant contraction for those companies. And this is what we've seen. So the Brent oil barrel dropping to $30, or even slightly below $30. That was very. They suffered a lot from that, and that's seen in their financial results. Then, as I said, we have also the impact from the pandemic. It's I think very good referred in the ranking. So textiles and clothing, the sector which suffered a lot from lockdown measures, so closed shopping malls, but also people's hesitancy to buy new clothing. Lots of us stayed at home. Still, we work from home, so the demand for clothing was not as high as it was previously. And of course, we have many question marks regarding the situation, not only regarding the health situation, but also regarding the situation on the labor market, especially before the supportive measures were introduced, so people just focus on their daily necessities. They were not likely to buy other goods. And here, as you can see, also we have the automotive and transports, especially the former, so the automotive one, suffered a lot from the impact of the pandemic. There was a huge drop of demand for new vehicles. As I said, the same reasons. So the concerns regarding the health situation, the concerns regarding the situation on the labor market, that impacted that the demand for new vehicles contracted a lot. And well, in the remaining part of the year, I mean, in the final quarter, or just overall in the second half of 2020, it started to rebound. But as we know, the automotive sector right now suffers a lot from supply constraints. The availability of semiconductors, for example, is very low, especially for the automotive sector. So it moved right now from the demand contraction to supply constraints. So indeed, this sector is not only the one that suffered in 2020, it also still suffers, but right now it's actually a different reason. In 2020 it was more demand one, but right now it's more that it's the output one, the supply one. And well, we have also some countries that were fortunate to generate positive growth of turnover. As you can see, there are mostly two of them. So the ICT sector, well, that's the one that benefited a lot from the higher demand from the ICT products for electronics. We stayed at home, we work from home, so for lots of companies just bought more electronic equipment. Also, our kids learned from home, so we needed more laptops for our personal reasons, and more to that, we also have higher demand for services coming from the ICT sector. So all in all, as you can see, the growth of turnover in the ICT sector was a very strong one, and also the trade sector. Well, the trade sector is quite tricky because first it recorded higher demand just before the lockdowns introduced. A kind of panic buying before that, but also afterwards, people, as I mentioned previously, they focus mostly on daily necessities in their spendings. And that was beneficial, especially for those companies from the largest ones in our region, because they are present also in the online part of this segment. For other companies, especially these small ones or even medium ones, the situation overall in the trade sector was not so beneficial, but it seems that for the largest ones, they were able to generate much higher turnover than a year ago. Well, on this chart, you can see also some other sectors. Maybe I will not discuss it in details. Maybe just few words on the construction sector. This is the one that I think it's maybe not a winner of the pandemic, but the one that surprised with that the contraction was not huge here, or actually delivered a higher growth of turnover than a year ago. It was also able to employ more people than a year ago. And whereas there were concerns during the first wave of the pandemic that this is what we have in our region for many years, actually. It started many years ago, so a good situation on the new housing market with high demand here. Maybe there were some concerns regarding that during the first wave of the pandemic, but they disappeared quite fast. And still, as you know, the demand for the new housing is high, not only new, but overall the housing is high. Also, the prices are still going up. And then for the construction sector, of course, it was not only the one reason, because we have also in our region lots of companies from the construction sector present in the infrastructural part, which are still benefited by the EU funds, and then they will benefit, for example, from the upcoming EU recovery fund, with already some countries receiving first payments in our region. Well, so I think I didn't miss any crucial part of the ranking. If you are, as I said, if you are interested in more details, we are happy to share the ranking. Also, in the ranking itself, you do not have only the table with 500 companies, you have the analysis. There's also the number, the largest companies in particular countries, in your countries or in countries that you are interested in. We could finish this webinar, or rather go to the Q&A session at this stage, but I think it would be missing a significant part. So what's our view on the current outlook of the Central and Eastern European region? I already mentioned some insights when I was talking regarding the ranking, but here let me just go briefly, because we are running out of time. I would like also to leave some time from the Q&A session. So here I will start just very briefly on the global situation. So the global situation, according to our latest growth forecast, is still improving. In 2021, we will have 5.6% growth of the global economy, which actually is, as you can see, very high, also compared to pre-crisis levels. But here I would say that there are two crucial issues. So one, this is fueled by a very low statistical base effect that we had in 2020, so this contraction that was a year ago. And the second issue is that we have large economies, large emerging economies that impact this global average. Here I mean mostly China. You can see on the chart on the right-hand side that China was was the economy among those largest ones that you can see on the chart on the right-hand side. That one that finally it didn't record a recession in 2020. Growth was positive. It was 2.3%. It was different in quarterly growth, but we had a negative value there. But in overall in 2020 it was positive, and then it grows further. So it also fuels the global average. So if we look more into countries that we are especially interested in, or rather I believe you're interested in, so Western European countries, which usually for companies here or our region are the main trading export destinations. As you can see, Here, those countries, for example, like Germany, France, UK, or other Western European countries, the growth levels in 2021 are still lower, they are not fully recovering from the contraction of 2020. It's more that it's going to be in 2022. And actually, I think that that's the main conclusion that we should have in mind looking at those charts. And well, I already said about it that this recovery process fueled the higher demand from various inputs, including commodities, including semiconductors, many others. As a result, prices of commodities increased a lot. The growth was not only compensating the effects of the drop that we had during the first wave of the pandemic, but also it's much higher than we had in previous years. So it affected companies, it affected with higher costs of inputs. And it's not only that there are typical manufacturing inputs, not just raw commodities, but also we have a higher prices of energy, of the electricity, as well of transport. So here I mean fuel. So this is what I said, that in 2020 oil prices dropped. Since then they recovered very fast. They grew a lot, and also we have higher costs of transports overall, not only in terms of just fuel for the freight road transports, but also the maritime transport, which I remind you is very crucial for the trade between China and Europe, China and the US. Those levels of those prices of cargo transports in those directions, they increased a lot, and they also increased overall costs. And for countries in Central and Eastern Europe, what are our forecasts here? Again, GDP growth for 2020, as you can see on the chart on the left-hand side, but also our forecast for 2021 and 2022. Well, so here I think that we are on a better side than Western European economies, and because lots of countries in 2021 already they got the pre-crisis levels. Actually, you can see that on the chart on the right-hand side. Here you have all European Union countries that, not all, sorry, but that what with available data so far for the third quarter of 2021. Here, if you see that countries are with positive values, it means that they already recovered to the pre-crisis level, and the pre-crisis level, I mean the last quarter of 2019. And we have here lots of countries from Central and Eastern Europe, including Poland, Romania, Lithuania, Latvia, Hungary, or Bulgaria. And those countries are above pre-crisis levels. Of course, we can also find some Western European countries, which are those ones mostly from Nordics, but other ones crucial for us, so Germany, France, or Italy, or also Spain, which is for some countries is also not maybe the biggest important, but it remains top 10 trading destinations for some countries in Central and Eastern Europe. They are still below this pre-crisis level. As you can see, countries like Spain, Portugal, and also Italy, they are strongly dependent on the tourism sector, so still this recovery takes some time for them. But also, unfortunately, we have two countries from Central and Eastern Europe here, which is the Czech Republic and Slovakia, which right now, well, they are, first of all, they are very dependent on that, what's happening in the German economy, because they are strongly linked, especially with their manufacturing sector. And if manufacturing sector, they suffer right now with these higher prices of inputs, with shortages, and that also is referred in this recovery process of those countries. And let me remind you that also a year ago, roughly a year ago, or even a little less, we had a very challenging situation in terms of the COVID-19 infections that rose a lot, and also there were some restrictions, very tight restrictions imposed, so that also still affects this process, this trend of the economic recovery. Just looking at the household consumption, so as I said, it remains the growth driver in countries in our region, how it looks. Well, retail sales, I would say that mostly come back to the improving trend. As you can see, well, I think that hopefully you can see it because I put many lines, many countries on the chart on the left-hand side, but my intention was that to show you that the trend of retail sales is improving. Of course, we had some ups and downs related to particular waves of COVID-19, not only the first one, but also you can see at the beginning, at the end of 2020 and the beginning of 2021, we also had the impact coming from that for retail sales. But overall, it seems that the recovery of household consumption is quite stable. But here, let's remember about two issues. One of that is inflation that is present in our region widely, and not only in our region. Inflation is the topic that became very crucial recently for, I would say, globally. I will just mention inflation in a few minutes. And the second one is again COVID-19. So the share of population that is fully vaccinated in our region, actually it was improving once the vaccine was available, but I think it stalled at some process. As you can see, we have some countries that are better in terms of vaccinating people, but the hesitancy, mostly the hesitancy of people to get vaccinated, it makes that some countries are quite far away from the European Union average, or even from the world average, from the global average. As you can see, mostly I am in Bulgaria and Romania, which are much lower, and that could have again negative effects on the economic activity. And well, we already see that in Western Europe, in Austria, in France, in other countries, also in Germany, we have more restrictive approach to rising infections. So also for our export markets, it's very crucial information here. So despite COVID-19 is almost 2 years with us, it still impacts, I think, the economic activity, and we should be aware of that. Well, I already said about rising prices of inputs, and I think that's clearly seen in the producer prices in industry. Here on the chart on the left-hand side, you have a few countries, examples of few countries, and as you can see, those prices increased a lot. So it's not only that the level is very high, and please take a look at the scale of this chart is up to 20. So especially recently we have high increases in Bulgaria and Romania, but it's mostly due to the fact that previously that this increase was not as high as in other countries. But nevertheless, it's not only the level but also the acceleration, which is very high, and it hurts a lot of companies. And here on the chart on the right-hand side, you have the example of Poland, but actually it looks the same in other countries in our region. So there are surveys when statistical offices ask companies regarding factors that limit production of particular companies. And here you have the replies coming from industrial companies. Well, as you can see, I think that the first conclusion is that insufficient demand is not as crucial as during previous waves of the pandemic. It's again at the same level like it was in 2018, 2019. So that was a relatively good period of the economic activity. One other conclusion is that the labor shortages are coming back. There was a kind of relief of the tight labor market during the first waves of pandemics, but right now you can see it's not at the same level, at least in terms of Poland, it's not at the same level like it was in 2019, but I think it's coming back to that level, concluding also negative demographic trends that we have in Central and Eastern Europe. But here, as you can see, the other issue, which previously was not very crucial, so the material shortage of inputs, this concern increased a lot. It's right now in Poland, it's more crucial than concerns regarding the demand. And if we would take a look at other countries which are very dependent on the manufacturing sector, when the manufacturing sector constitutes a significant part of the economy, right now this material shortage is even more important than labor shortages. Here are examples of the Czech Republic or even Western European countries like Austria, like Germany. There this input shortage became one of the biggest obstacle that companies have to tackle with. Here, of course, it affects inflation. Inflation, as we all know, it increased to levels that we have not seen in many years back. I think there's no exceptions in terms of countries in our region. Of course, we have not only the impact of supply constraints here, because that impact, in my view, will be seen also in next months. But previously, we've seen the impact of higher energy prices, higher transport prices. Actually, you have the confirmation of that on the chart on the right-hand side with the changes in particular components of October inflation. As you can see, those golden and red bars, which are responsible for energy, electricity, as well as transport prices, are the highest here in countries in our region. More to that, I would say that you can see that food inflation is not very high, but I would expect that in next year, especially at the beginning of this next year, it will go higher, as we have higher prices of natural gas, and natural gas is used in the production process of fertilizers. It is the main commodity, the main cost that producers of fertilizers have, and that will also impact the production costs of food. So I would expect that it will be transferred also to food prices. So indeed, in 2022, we should not expect the decrease of inflation. It will remain on higher levels. Nevertheless, more in next months, the high statistical base effect will make that these increases will be not as high as previously, but as I said, remaining on high levels. The decrease of inflation is likely to be seen in 2023. And that, of course, made already some central banks to react in our region. Actually, all those from the largest economies increased interest rates. Some of them already in few steps, or like quite huge ones, like the latest one coming from the Czech Republic by 125 basis points. So really high level for such economies like we have in our region. And also those banks which were very reluctant to do it. Here I mostly mean the Polish central bank, which excluded even during the pandemic, during 2020, to increase interest rates. It did those two moves, and others could also, other moves could join that. Of course, everything depends on inflation, on that how inflation will be triggered by the pent-up demand. So not only that it will be fueled by higher global prices, but that people's spending will cause that inflation will go up. And here, as I told you, the situation is not very clear, because on one hand we have this recovery, people are likely to spend more, but on the other hand, with higher inflation, with rising number of COVID-19 infections, we could have some concerns regarding the household consumption, and luckily we will not have lockdowns, but I think it should be also somewhere, it should be included in our negative scenarios. Well, so that's the outlook. Still we have some time for questions. So right now let's move to the Q&A session. Once again, I will remind you that in this GoToWebinar tool panel on the right-hand side of your hand, you have the questions window where you can ask questions. I will just take a look if there are already some questions. I can see that already And they are coming in. Yes. Well, so there's a request regarding the list of 500 companies would be highly appreciated. Well, as I said, indeed, we will be contacting you, so we'll be happy to share our publication and also our presentation that I provided you today.
Additionally, Grzegorz, one remark.
Yes.
If someone wants this list urgently, at every Coface local web page, so like Coface.pl, Coface.ro, Coface.se, you can find top 500, and if you just send us your email address, we will send you top 500 list.
Yes, thank you, Dorota, indeed, for this reminder. I forgot about it. Well, I also see a question regarding our view regarding the next actually the next ranking, if what we think will be here. So I think next year, if we meet in 1 year during the similar webinar, I think that companies here will be able to deliver higher turnover growth, but unfortunately not higher net profits. Actually, I didn't mention that, but in our current report for 2020, first of all, as I said, we've seen the contraction of GDP, sorry, not GDP, a contraction of turnover by 3.3%, but the contraction of net profits for those companies was by 24%. So I think that especially the latter part, so the second part of 2020 was that with higher prices of inputs that companies were not able to generate as high profits as in 2019, and I think that the similar situation will be in 2020, although turnover will grow, but it will be a huge pressure for net profits, because as we see, the input prices, the producer price index, it increased much higher than the level of inflation. So not all of those costs are transferred to final consumers. Of course, there are transfers for other companies in the chain, in the production chain, to distributors. Not so much, I think, for suppliers, because if there's a concerns regarding supplies, there's difficult also to negotiate prices here. But as I said, I would expect growth of turnover next year for 2021, but unfortunately still the decrease of net profits. Okay, so I think we reached 11 o'clock. So we hope that you found this webinar interesting. We thank you for your attendance. We hope to see you at our webinars. We do it on a regular basis, lots of webinars, not only actually on rankings on our publications, but also on our publications, but in general on economic subjects and various other subjects. So we hope to have you during our next webinars. So thank you, stay healthy, and have a nice rest of the day. Goodbye.
Thank you very much, and we are at your disposal for any further questions. Thank you, bye.